What's up, guys? This is Carter Thomas with Coin Mastery. I don't even know if it's Coin Mastery TV anymore. It's been a minute. It's been like a year and a half since I've done one of these. So let's give it a shot. Figured I would hop on here. We are at a very interesting juncture, as you would say. Today I want to talk kind of like the overview stuff, a little bit about Bitcoin, Ethereum, kind of what's going on, where are we, what's happening, some other ideas around what's going on in the ecosystem, maybe to connect a few dots that I've been thinking about. Maybe it'll help you. And then also, probably most importantly, share and remind people about the tools available that for free that everyone has access to these, and kind of how to approach what may go down in the next 6 to 12 months, because it looks like it's going to be pretty wild. And if you're not ready for it, if you're not prepared, you could not necessarily lose a lot of money, but it's almost more traumatic sometimes to miss huge opportunities because you blame yourself. You're like, oh my God, it was a once in a lifetime thing. I didn't do it right. And so hopefully you can get some ideas and some tools so that you can capitalize on this, feel like you have a plan, feel prepared, and no matter what happens, you'll be able to capture a lot of upside and limit your downside. So that's the goal. And we'll just kind of bounce around and see what works and how this goes down. I've no idea how this is going to go down. The last one I did was it's like May of 2019, and I talked a lot about the Bitcoin price. I talked about it's going to 30,000, and then I talked about how yields were a big thing that the world needed. And it's kind of a similar theme this time. So as you can see, I'm pulling up the Bitcoin chart right here. And you can see that we're obviously very close to breaking through all-time highs. I mean, I wouldn't say it's inevitable because you can never really say anything's inevitable, but we're so close, and there's so many eyeballs on this, and there's just so much pressure that it would be shocking to me that we didn't break through all-time highs, or at least like match them this week or maybe next week at some point. Now, I don't think this is going to be a straight shot to 35,000, which is kind of like my next target. I think it's going to go much farther beyond that. I haven't really thought about that much, but I do think that what will happen is going to look more like gold. So I pulled up the gold futures chart just so you guys can see it. I'm going to pull up the weekly chart. So if anyone pays attention to gold, great. This summer, there was a lot of buzz going around about how gold was going to break its all-time highs that happened in August of 2011. And you can remember, I think that the gold fractal is very comparable to Bitcoin in many ways. Like, it's not one-to-one or anything like that, but it's worth looking at. There's so many parallels, especially in how people think about it, the way people trade it. And you could see that they had this big run-up in 2011. There was a huge precious metals boom right after the financial crisis. And you could see how it just blasted through all-time highs in the summer, and then it kept going. And what happened was that it didn't just like keep going straight up. It blew through, and then it's consolidating. It's been consolidating for the better part of the year since then. So I don't know, what's that, 4 or 5 months? And obviously Bitcoin's a different beast than gold, but I do think that this is a really helpful framework to think about one way, because there's so much energy, there's so much power going into the market right now in Bitcoin that it needs time to cool off. Now, Bitcoin has a tendency to move a lot higher volatility than most other assets. So it could just like blow through, have a sharp sell-off, and then continue it to march upwards towards 30, 40,000, something like that. But on my other platform, what I use to trade futures with, I have been getting a lot of top signals, like sell signals, which are not, it's more about like there's a higher probability that things are either going to pause or they're going to reverse. It's like a 70, 80% probability. And I got the same thing in gold on the daily and weekly time frame signals. And then this is what happened with gold. So the way I'm thinking about Bitcoin, especially on the daily chart, is that I think it's going to, bounce. It's going to go through 20,000, maybe up to 21, 22, but we're going to have this like weird chop consolidation phase. And if we're lucky, we'll get a big pullback, like a 30-40% pullback, which is totally normal in these bull markets. Absolute gold mine would be down here, 12,600, 12,800, something in this area, because this zone, this isn't as clean as that one at 4,500 that we talked about last time. But right here, I don't even know what you call this, like 12,500, you can see how there's this, like a bit of a liquidity bar right here. I gotta change that to being full color so you guys can see it. And it also matches up with this previous resistance. I don't know if we're gonna get down that far. At the very least, I think if we can get down to like 14.7, something like that, that might be an interesting place to start buying, because they're gonna have a lot of bids going down to this 13.9, 14,000 area, but we may not. The market just may not give you that. So if I was going to layer bids to go long for the next big leg up, this is probably where I would be scouting out, right around 14,000, maybe a little bit above, just to make sure I got the bids. And then 12,500 is where I would really try to probably back up the truck for any sort of huge spike down. It's right when people are like, oh, I told you it was a scam, this is all bullshit. That's really when you want to buy. What I'll be watching for is I want to see a big spike in volume. That's going to tell me that we're getting towards the bottom of that move. And then I want to see a big reversal candle, a big reversal bar. If you don't know what that is, you should go Google it, because it's a really helpful thing to learn about how these things work. So if you're at home, if you're waiting for a pullback, these are the two levels that I'm looking at. But frankly, I'm not banking on it. I'm not like planning on it. I have plenty of money invested in the market right now. So if we get this, I'll buy more, but that's kind of how I'm looking at it right now. If it goes through this and I don't see the reversal stuff, I would cut those bids. I would just end the trade and reassess from there. And who knows what the next area would be. So that's what I'm thinking about with Bitcoin. Now, from a longer term standpoint, let's go to the weekly charts. If I was going to, we talked last time about getting up to like 30,000. So I've done some expansion charts in my other time, so I'm just kind of ballparking it. Somewhere around 30 to 35,000 would be the next logical point of interest. So between the all-time highs up here is probably going to be pretty wild. It's probably because there's price discovery, right? Anytime you have an asset that goes into these new price areas, there's no resistance, there's no support. It's just figuring it out as it goes. And with an asset like Bitcoin in new all-time high territory, it's typically going to have a pretty wild move. Because think about all of this energy, all of this price action down here. This is all a slingshot. This is just energy compressing, and it's just going to blast off. And then when we get up here, we'll probably have some sort of consolidation, maybe a drop down. I mean, we could even get it as crazy as a pullback down to all-time highs. Because if you think about it, if we get up to like 32,000, back down to all-time highs, 39, 40%. Like, that's not out of the question for the kind of pull downs we'd expect in Bitcoin markets. So that's where we're at. I think we're gonna get some excitement when we break all-time highs. I think we might get a bit of a bull trap where it pops up and then it consolidates and pulls back. Maybe we get 14,000. Maybe we get 12,600. Maybe not. Maybe we just shoot straight up. So the to-do list for anybody out there who's listening, who's not sure what to do, if you don't have any money, first of all, I got to say this, none of this is financial advice. I'm just a regular dude. This is just my experience. Please don't take any of this seriously or professionally. Consult somebody who is licensed before you do anything. Okay, got that figured out. But if you are in a position where you don't have Bitcoin in the market, or you don't have enough Bitcoin, or you feel like you're missing out on something, it's really helpful if you go take 5 or 10% of what you have and just go buy it right now. Know that you're probably not going to buy it at the right price, but it will relieve so much anxiety of these bull markets. I can't tell you what happens often with people, myself included. This is what happened to me in 2017, and then again, last summer. is that you're waiting for the moment when you can deploy all your capital. You're waiting for someone to tell you like what the coin's going to be, or when the dip is, or like what's the thing that's going to get you to go all in. And you rarely get those moments. Like maybe once a year you might get them, but it's really hard to get those, to like wait for those to happen unless you're a professional trader. You've got a ton of money and you're just doing this for fun. So when you put in 5 or 10% into something like Bitcoin, where there's a high probability that it's going to go up, the anxiety goes down so much. And you're like, okay, well, at least I'm in the game. At least I've got some skin in the game now. And you can start to think a little bit more clearly. That's just my experience. I would definitely recommend, if you're waking up like being like, oh man, I want that. I want to have exposure to that asset so bad. Just buy a little bit, right? So that's Bitcoin. I think that, there's so many parts of Bitcoin. I do think this GBTC thing is not getting nearly enough credit for what it's doing. I think the fact that Monday through Friday during open market hours, not futures hours, like actual New York Stock Exchange hours, because you can only buy this over the counter, that's when you get the biggest kind of, the price action is just, it's almost mechanical, right? It just straight up. And I think that the Grayscale Bitcoin Trust product, you can buy it with your retirement account. And I think that it's the fact that they're buying so much and the premium is maintaining the price premium so well, and the fact that it's $20 is, to me, makes me think that it's not just people signing up for Coinbase. There's something else going on, whether it be retail investors who have retirement accounts, which can be anybody. It could be institutional people that just want better custody than owning coins in crypto exchanges. But the GBTC thing is a huge deal. I also think that the GBTC thing also could have some, like, when you think about black swan events, like you always want to be thinking about what's the risk here. Like obviously we think about regulatory risk, about the asset class of Bitcoin, but there's also a big risk if something happens to that, will that have something that makes the market really volatile and shaky? So I think it's worth staying on top of what's going in GBTC. They have a good system going. They have a ton of Bitcoin. They stored it at Coinbase custody. But I do think that story is worth noting as a potential, like a vector of risk, because it's important. So that's Bitcoin. Very bullish. I don't think it's going to stop at 30,000. I think it's going to go a lot higher than that, but one step at a time. Now, the other big asset is Ethereum, which is just showing like ridiculous bullishness. Again, this is also pretty overbought, but it doesn't mean it's going to pull back. It just means it needs to cool off or consolidate for a little bit. I would say the next place that it's going to go, if I was going to take profits somewhere, I don't know, like 775, something like that. I think that's a pretty. I think you're going to see a lot of resistance there. You may see a big pullback or something like this, but no matter what, I would put a lot of money. I have put a lot of money that we're going to see all-time highs on this. Like Ethereum is my biggest asset ownership. It's the asset I own the most of. I always have, and I'm very bullish on it. Similarly, I'll get this thing out of there. I think that it has an issue with the chart right there. So 412, and then also all in this area. So like 288 down to 250-ish. This is like what you remember when I talked about down at like 4,000, there was that thing that looked, something was wrong with the chart, that typically that needs to get worked out. That's kind of what's going on here with Ethereum, right where this resistance is. So 285, maybe an area. It's kind of going on here at 413. That just means the price went way too vertical too fast, and it hasn't balanced itself out yet. So can things go completely crazy before that gets balanced out? Yes. Does it need to get balanced out necessarily? No, it doesn't necessarily need to get balanced out. It's just that I would probably be a little bit more comfortable if it did, but it's not an absolute necessity. So that's the only issue with Ethereum that's keeping me, like if this price had come down and tagged 260 and then it had done what it's done, this would be like game over. But the fact that it didn't quite do that it gives me a little bit of pause. I do think it may get some more legs before it comes down there. It may not. So I think if the potential upside of Ethereum is higher, but I think the risk profile is a little bit bigger just based on the chart analysis. If, Bitcoin probably has less of an upside potential, 60%, but there's less things that are going to, from a technical standpoint, that would make you, shit your pants, for lack of a better term. So that's that. Those are the big two. Those are the two I'm thinking about the most. I'm interested to see how it goes. I do think that this week is going to be super interesting, especially with the stock market. I know a lot of people here are interested in the stock market. I know many people are not, so I'm not going to spend a lot of time on it. I do think that we are getting to a point where, it's just getting a little overextended, but more importantly, with the political climate, with things changing in the political climate, with regulatory climate changing, and also probably the biggest news is that Mnuchin is going to try to wind down a lot of the the lines of credit that were going out for the whole thing that happened this year. And when the confidence goes away that the money is not going to come as easily, that may change the bullishness of the past 9 months or whatever it's been, 8 months since March. So if we wake up and next week they're like, look, we're gonna bazooka everything we need to. They're kind of trying to cover their tracks right now. Great. I think that there's going to be some sort of a little bit of pullback. But the reason why this is important is we don't know what's going to happen to Bitcoin and Ethereum or anything when the stock market takes a dive. It's harder for me to give you any sort of like analysis on the stock market right now because there's more different technicals involved. But I would definitely be paying attention to stocks and to what's going on in the stock market. Don't listen to the talking heads telling you like everything's going to crash. All you got to think about is, are companies making money and is the liquidity there? And right now it is, but it looks like the liquidities might be getting pulled back a little bit. So we'll see what happens with that. All right. So next question, what other coins should people be looking at? And I'll be perfectly honest, I am not the best person for these bull runs to be able to tell you like, oh, you should definitely do this, you should definitely do that. Because as somebody who's learned a lot about quantitative finance, I can't backtest. Like my backtest on picking coins is not a statistical edge. Like I have a pretty good track record when I'm just doing my own thing and I get these gut feelings and I make it go. But if I'm trying to pick it on a video and tell a lot of people, I don't have a very good track record. So please do your own research on this, or go pay somebody who has a really good track record and have them tell you what they're going to buy. Otherwise, stick to a couple of coins that you're really good at and just trade those, or just buy the ones you like and hold them and call it a day. Don't even worry about it. I think that, especially from 2017, it's like the dumber things tend to be the better reasons to buy coins, and the smarter things tend to be the worst reasons. So what I mean by something that might sound stupid is like a cheap coin is probably a better reason to buy it than the fact that they have an amazing team. Purely when we're talking about like mega bull run, melt your face off rallies, cheap coins tend to do really, really, really well, or like they look flashy, or something about them like has a lot of memes going on or whatever. So I think it's really important not to overthink what you're buying, right? So, I mean, in 2017, for a while, I would be like, okay, let's go check out Cosmos. I actually think Cosmos is a really interesting project. They have a really good team. They have a lot of, it's like I'm very bullish on it long term, years and years and years. But would I buy that for as like my bullish bet right now? No, probably not, because there are not people on Twitter shilling it like crazy who are obsessed with it and like think it's hilarious and make all sorts of shit posts about it. And because of that, like the energy won't flow there nearly as hard as it will flow to things like what happened with Ripple right now, right? Like Ripple's just going bananas because All these people are talking about it. The chart looked pretty good, and things like that. So it's a lot better to follow the energy of the market. Follow the thing that a lot of people are talking about, that has a lot of it seems to be what the conversations are all about, and don't get caught up in the smart money stuff. It sounds very counterintuitive, but that's what happened. That's what's happened each time with these crazy bull runs, with the exception of DeFi, but that's a little different because that was kind of like an isolated. I don't think that wasn't like a broad participation rally. It was more of a there was a handful of people that owned a huge amount of supply, the yield farmers and the whales and all that. People woke up to this, and then it kind of exploded in almost 2 months. It went up and down, and now it's kind of having a second wind. So if you're going to pick a coin, like my best advice is follow a lot of people on Twitter. If you don't know who to follow on Twitter, go follow a few people and then go look at who they're following and just get a sense of like, what is everybody talking about? Like, what are people shilling the hardest? And I'm telling you, like, that often is the best thing in 2017, or these type of huge mega bull runs, because that's what a lot of retail money will be influenced by, and they'll buy it and so to speak. You also don't need to get the whole bull run. Like, just get a little, like, who cares if it starts to go? Like, just get it before it does the whole thing. Put in 10%, do smart, start small. All right. So that's, I know that might be, like, some people might want me to tell them exactly what coins to do or whatever. I've never really been that guy. I don't know what coins you should do. I'm on Twitter. I will definitely tell you, like, as I'm interested in different stuff, but just go find these people. Go look online. Like, you'll see what I'm talking about. It's really interesting. Now, probably the most interesting thing I'm thinking about, which is, last time it was about yields. I think the next big thing in crypto that's going to come out of crypto that is going to lead to like crazy shit is going to be this idea of making markets. So anybody who's watching the United States election, or watching at least the prediction markets that came from the elections, on FTX there was all these prediction markets, right? So it was like Trump versus Biden, and I guess here's like, who's going to win the Senate and the House and all this. And what's interesting is that this stuff was trading in real time. Now, Predicted has these markets, and there's a couple of like Poly markets, another one, but they're not liquid, and you can't put a lot of money into it. FTX, on the other hand, was very liquid, and you could put a lot of money in there if you have an FTX account. This to me was like, I could not believe how obvious this seems to me when you think about the future. And let me explain why. Sports betting. A lot of these companies are doing IPOs, like DraftKings, Penn National Gaming, which is like David Portnoy and all that. Sports betting is starting to get legalized in all these countries, all these states around the United States. So like, I think it's $85 billion market, total addressable market. And it's just going to get bigger. It's kind of like marijuana in that sense, but sports betting is just a beast into itself. Now, the thing about sports betting is that it's almost like an option, where if you're betting, let's say you're betting on the Falcons beating the Cowboys or whatever, or an NBA game or whatever it may be, you make a bet, you sit there and you watch the game, and you're either right or you're wrong. You bet on the odds before the game starts. But that's kind of a bet, like, that's not a very good experience. And the amount of money that can go into that sort of thing is a certain size. But if you took that, and instead of having it be, you got to bet against the bookie or bet against the house with certain odds, if you could trade a real-time market that was showing the price moving up and down, or whatever the thing you're betting on is, maybe it's like total yards passed or rushing yards or total points after reception, whatever it may be. If it was like this, if it was an actual marketplace that looked like a chart, a price chart, right? If it looked like this in real time, you could trade the over-under on the game, and it would trend in the way, like, as the game went on, and like if someone got injured or if the weather changed or whatever. And you could bet, and you can go long and you could short the entire time during that game instead of making one bet on the sports. And I'm saying sports betting because people already understand that. There's already a huge market for that this could kind of dovetail into. But the bigger thing is this idea that people are like, there's no alpha left in the global markets. When you go talk to money managers, when you go talk to hedge fund managers, people that are managing large amounts of money, they're running out of things that they can buy. There's nothing left. If you went to them and said, like, all right, we need you to make 15-20% a year, which is really good if you're managing, billions of dollars. I mean, that's a very good return. What are you going to buy? Like, you going to buy bonds? No. I mean, maybe if you do like leveraged bonds or something. Are you going to buy gold? Maybe a little bit, but you can't really, historically, you can't really allocate that much money to gold. Like, there's nothing left. And you look at the stock market, and when we're way up here and these valuations are what they are, for you to go heavy into these markets, you're basically buying like these very expensive growth stocks. And so there's this huge amount of money that's paralyzed, that just doesn't know what to do. And the only thing they can do is they can buy options on certain things to kind of try to get some alpha exposure. That's why you're seeing these put call ratios that are just off the charts. Every week they just get bigger and bigger because that's the only way to get this alpha, because who's going to buy stock when it's this expensive, but it just keeps going up. And so this is a huge problem. The amount of money that's being managed in the world is like $100 trillion market cap or something like that. And so I think that when you take that sports betting example, that you'll probably see that at some point, maybe it's FTX, who knows. The next step is going to be, well, how do we create new things for people to bet on? And betting is the wrong word. It'd be like new things for people to invest in. So if I went to someone and said, listen, you're investing in, I don't know, like stocks and bonds and emerging markets and maybe some like currency hedges or whatever it may be. Wouldn't you like to bet on the growth rate of San Antonio, Texas? And be like, what do you mean? I go, well, let's say that the population numbers of San Antonio were put onto an index, which they are. That number is counted maybe quarterly by the state or the city or whatever it may be. Or let's say it's monthly. We can take that number and imagine if you could buy a piece of stock or an equity or a coin that mapped the growth of that market or the decline. And you could go long or short on what you thought the population would be in this city. And you could take that population and you could turn it into a marketplace where people would take the other side of that bet. If you went to some of these managers, money managers, they'd be like, wow, that sounds interesting, but I could never do that because I need to put like 20 million, 50 million, 100 million into something. And like that, obviously the market for that would be tiny. And that's when this whole DeFi thing comes in. And if you guys have never dug into DeFi, I would definitely recommend going and learning about DeFi. It's just wild. Like when you get beyond the yield farming, which is, it's interesting at some level, but it's also like, it's super weird and scammy on the other side. But what it has done is it's created a bit of a bond market. And so bond markets, for anybody who knows the ins and outs of bond markets, it creates a marketplace for people who want debt and people who want credit. That's all it is. Like it creates that. You get yields on one side for the savers, and you get liquidity for people that want the credit. And so if you look at this new marketplace, if you wanted to bet on something like the growth rates of San Antonio, all you needed is liquidity. You needed something that could match any bet that you're going to make. And so with DeFi, we've got what? $14.4 billion in DeFi. All of these tokens are on decentralized exchanges. It's all running on Ethereum, or for the most part. And it can all be real-time changed into any coin necessary. It can be in any token necessary, into stable coins, anything, all in real time. And with Ethereum 2.0 coming out, that's going to make it even more exciting. And so now, all of a sudden, if you want to make that market happen, where you're talking about San Antonio growth or whatever it may be, you can make it happen because you have you have $14.4 billion pool of liquidity on the other side of it that you can take that bet against. As long as the data feed that comes in, which is the Oracle problem, as long as that is legit and verifiable, you can create a market for anything. So all of a sudden you're realizing like, geez, I can trade anything. I can become so like, imagine if you're a farmer. Imagine if you live in some place and you have some special unique skill where you can predict the weather in Nebraska better than most people can. And if you could bet what's the temperature going to be in Omaha, Nebraska next week. And right now the market is saying it's going to be 86, and you can tell by like the bones in your body or the thing in your house that it's going to be 82. You can make a huge amount of money on that, and you can trade it. Like you could short the temperature. So some of these examples are obviously going to take years and years before people understand it. The sports betting thing, I think, could happen very, very quickly. I think FTX is the place to watch this sort of innovation. They're already bringing stocks in. But I think that this idea is not only it's interesting and it'd be fun, it's the thing that money managers, is the thing that the hedge fund guys, like they need this more than anything. This is such a huge problem. This is a much bigger problem than the yield problem. This is like, this would completely change the game. And whenever I tell people who own hedge funds or partners in hedge funds about this, they're like, please tell me when this starts happening. Like I have to know how this works. So I would definitely look into this world. I think a lot of the DeFi tokens are going to benefit from this. So if you don't have any exposure to DeFi, I would definitely look through all the different DeFi tokens and see which ones appeal to you. I think that's a really good thing. I think that what D-Hedge is doing, which is, D-Hedge is interesting. Melon is another one that's pretty interesting. They take it a step further where instead of it being like the indexes that create the markets, you can become the actual hedge fund, right? So let's say I wanted to be the one, like I want to make a fund where I traded weather future, like the weather in Nebraska. I trade the population of Texas cities, and I trade, like salinity in the ocean. Like, I don't know, you make it up. I could create a profile on something like D-Hedge, and there's going to be plenty more like this. This is just the first one that I've seen. And you can set up your profile, and then you can go to people and say like, okay, like, let me see if I can pull this up. I would go to them and be like, okay, if you want to put tokens into my fund, like here we go, right? Like Hopium, it has $110 value, and his performance has been 43% right now. So you can, like, if I created one of these, people could invest in me just like they invest in a hedge fund. They could see my performance, and then I could tell, like, when you invest, you see what the fees are that I'm charging. I could charge 2 and 20, I could charge 0 and 30, I could charge whatever I wanted, and you can make a decision on whether or not you want to do it. But instead of this being like a copy trading platform, you actually see all the different things. Like I could be trading the S&P 500. I could be trading Bitcoin. I could be trading weather futures. I could be trading literally anything you can think of. But all you care about is like, what's your performance? How well are you doing? And then you would get a cut of all the money that I made off of these markets, and the token value would expand. Now, if you imagine that's massive. Like if $100 billion enters that space, like you could theoretically invest in this with a bigger amount of money than like anything else. I mean, a good buddy of mine is an insane futures trader. He makes tons and tons of money. He's really interested in what's going on in this space. And I was like, dude, if you create a profile, like I will buy 10% of the supply, and he'll get rich. Obviously he'll make a ton of money, but my token will go up like with his performance amount. Like it'll go up 30, 50% a year or whatever. Like that's crazy, you know? So like these kind of ideas, I think, are the future. And you know, that guy, what's his name? Chamath, the big VC guy in San Francisco, has a lot of SPACs, super smart, really like him. But he's starting to think about this stuff too, right? He's starting to democratize the way that people invest their money. Like in AngelList is doing this with rolling funds, where you can basically create a VC fund and hook up with AngelList, and they'll take care of all the back end, everything you need to take. And all you do is go out and you get the deals. And AngelList takes care of the whole back end. So it can be you by yourself starting a VC, like a venture capital fund that can handle millions and millions of dollars. Like that's crazy. And this is kind of the same thing. It's just all tokenized. So that you get way more flexibility with it and like a lot more interesting ideas. So this is the thing that if I wanted a, like what's your thing? What are you looking for? The way that you were looking for yields last time, this is what I'm looking for now, which is like our new market's bubbling up, right? And FTX is doing a good job. They're putting a lot of stocks onto the blockchain. They're allowing you to trade a lot of stocks on there. I don't have a FTX account, so I can't tell you exactly how it's working. But as they do this, and as they get more and more things built onto this, into a platform, a lot's going to happen, because then they're going to start to go to the DeFi pools. They're going to take this liquidity. They're going to take these oracles. They're going to get all these data feeds, and you're going to be able to go into the crypto world and trade anything you can think of that has a data feed, anything. And then all of a sudden you can invest in people that are trading. Like, how many times have you seen people on Twitter or whatever who are awesome traders or super smart and be like, man, I wish I could just invest in them. And we've never really been able to do that. But now all of a sudden, like, it may be able to happen where we can tokenize people's skill sets, and we can tokenize their alpha, which is pretty dope. So I'm really excited about that. I think that that's not necessarily as pertinent to this like immediate bull run, but I do think when you're thinking about, like, if you're going to have a 20, 50, 100x return type of thing, this to me is when I saw Ethereum in 2016, and I was like, all right, like, this is crazy. The idea of smart contracts and being able to build on top of an application layer, or, build applications on top of layer one. That was like the first mind-blowing. This is the next phase of that, where you can build markets on anything. And I think Ethereum is probably going to benefit in a big way. I think owning some sort of DeFi index is okay. I don't love indexes, but they will give you exposure. But I do think owning some of these blue chips, the synthetics and the Aves and potentially the Yearns, I think it's worth exploring those and checking them out. I'm very, very excited about that sort of thing. Last few things. I think this is just more operational, and I know this is what I use. And you can get this at coinmastery.com/trade sheet. Please don't request access for this. I think I had 25,000 people request access to this last time, and it's like I can email about it whenever you try to. So all you got to do is go to File. You can download it, or you can make a copy to your own Google Drive. So please do that. I did a tutorial video a long time ago. I think the link is here. But what you can do is when you buy something, what this does is it gives you price targets built on percentages that gives you at what price and how many coins should you sell if you just want to get your money back and leave the profits in the coin. That's usually how I trade crypto, because unless I really don't believe in the coin, I find that leaving it, sending it to a wallet and forgetting about it pays off extremely well over the long term. So that's usually what I would recommend doing, as long as you have enough money for taxes and make sure you take care of all that. So for example, today's the 22nd. I'd put November 22nd, coin XRP. If you bought XRP today, let's say I bought 1,000 coins. Price, I included the crypto finance add-on. So all you got to do is change the ticker. If it's not on Binance, just change the exchange of what it's on. And then that's going to give you the cost. So let's say you spent $465 and you bought it at 46 cents. Over here, it's going to say, all right, well, at 10%, that would be at 51.5115 cents. You should sell 909 coins, and you will get all of your money back plus 10% free Ripple coins. Now, if you wanted to get up to 20%, this is the price and this is how many you sell, blah, blah, blah. It keeps going. And then you can add on your own columns if you want to go to 50, where you can see that it's like 1.4 for 40, just change that to 1.5 for 50, things like that. But what this does is it gives it alleviates a lot of stress and takes away a lot of the mental load of what should I do? When should I sell? I don't know. Like, what's my target? If you can look at this objectively and say, like, look, if it goes up 30%, I'll be pretty happy. And at the very least, it just gets you to be like, all right, well, at 60 cents, you're going to go over and you're going to find 60 cents and you're going to put the line in, or maybe even put a limit order up there on 60 cents for this many coins, and be like, look, I'm in a clear-headed state of mind right now. I'm not feeling FOMO. I'm not sitting here thinking I'm going to make $1 million, because a lot changes when you see that price like ramping up. But if when you buy, you say, okay, this is the target that I'd be comfortable with getting my money back. I can sleep really well. Having this type of spreadsheet makes a huge difference, and then you can always just copy this, paste it down here, and do another coin. So I'll I'll go over here, and then I would say like Ethereum, right? And you could see that I would change this to ETH, and it would give you these prices again. So you can do it for yourself. That little thing makes a big difference when you're in these crazy bull runs. It'll just give you peace of mind knowing that you have a plan. The last thing I would recommend people checking out, this is an OG thing back when I first built out CoinMastery. Going back and just reviewing this, right? So go to coinmastery.com/checklist. It's a PDF. You can just download it. Any links on here probably won't work, like coinmastery.com/invest. I don't think that's going to work. So I have nothing to gain from this. But this is really helpful. If you're in these moments of FOMO, or if you're terrified if you should buy something, or you're unsure of it, just asking yourself these questions can help you clear your head. It can give you that breath of fresh air. And things have kind of heated up a little bit right now in the market. But if this goes crazy, like it easily could, it's almost impossible to think straight. Like all you can think about is someone tell me what to do. What should I buy? How much should I buy? And often you won't make a very good decision. So having a checklist like this can often give you the time and the mental space to look at this and be like, okay, this was written. I understood this when I was thinking clearly. Now that I'm reading it and it's telling me what I should and shouldn't do, maybe I should listen to it in the meantime. It seems ridiculous, but everything goes out the window as soon as these prices start going crazy. You start seeing money that you've never seen before in your life. So check it out. Hopefully that's helpful. I do think that I use this exact spreadsheet for all my trading, for crypto, for stocks, for everything. And it's made a huge difference. It's just it's so nice to have a system that you can immediately get an output from that I think will help people if things really go crazy, which all signs are pointing to the fact that they probably will. So that's that overview. I think Bitcoin's got a lot of juice left. May have some consolidation, maybe a terrifying dump here and there, but it's on its way to the next big move. I think Ethereum, same thing. It's got it's very exciting to get up here. I think there's some weird stuff down below, but we had some weird stuff in 2017 too, and that obviously didn't stop it until 2018. It came down and took care of business. So don't let that stop you from going in, at least with a small amount. No, that's obviously not advice. And then finally, keep your eyes open for this market making stuff. It's not going to be immediate, but it's just like that yield stuff that I was about 8 months early on that. This may be 8 months early again, but just keep your eyes open for these kind of things. I think that you're going to see some interesting things happen. Last thing, a lot of people ask me about things like DeFi and Celsius. BlockFi and Celsius, and I think that it's worth diversifying your coins. Bitcoin, Ethereum, and Celsius actually you get much better APR over there because it's a UK company. So there's a little bit more risk for US people, but you get higher yield. So, pick your poison. I think that it's worth diversifying your storage. I think that if you have all of your coins on a hard wallet, you're putting a lot of faith in yourself or in your living situation that's, I don't know. I think that it's really hard to keep a offline hardcore storage for all of your stuff. I think that it's really good to have coins on lots of different places and then have like a master system on how to access all that. So I definitely think that both BlockFi and Celsius, from everything I've researched, are very legit and they can make a big difference if you're planning on holding your coins for years and years. I mean, getting 4 to 5% on your stuff is like that's going to make a legit difference. I mean, I can't imagine if I had 5% on all my Ethereum and Bitcoin for the last 4 years. I mean, it'd be big improvement. So worth checking out. The decentralized stuff, like any sort of yield farming or Yearn or anything like that, that's definitely higher risk as these hacks you can imagine. You will get a bigger payday, but if you're not into that stuff, I probably wouldn't get into it, but worth checking out the other ones. And I think this is just gonna be a lot of fun. I think that this market is going to do a lot. I think that the other thing that comes to mind is diversification is actually kind of the worst in terms when you're in a big bull run. Like, you do not want to be diversified. When you're in a bear market, you do, or when you're in a sideways market or whatever, you want uncorrelated assets. But when you're in a blatant bull run like this, like, you want everything in the fastest horses. And so my strategy in these bull runs is I buy in a small amount, 5% of my trading account into, let's call it 8 to 10 coins that have good charts, have good narratives, are exciting and fresh. And, I feel like they've got a good potential to go big. And then every day, every couple of days, I'll take a look and I'll be like, okay, this one's consistently going up and this one keeps floundering, and there's no signs that that's going to change. So I'll sell a little bit of the floundering one and I'll put it in the one that's killing it. And I'll keep doing that. Like, I'll keep moving them around until some big moves start to happen. And then you can just kind of, step back and let the market do what it's going to do. And the ones that typically have been showing the most bullish activity tend to go the biggest, whereas the ones that have been floundering tend not to get the momentum. Like, momentum carries in markets. If you have momentum early, momentum during the bull run, like, you're going to have the most momentum at the end as well. And it's a lot of people are mean reverting, like they want to short the tops and stuff, but actually momentum is usually the best way to trade these markets, not trying to time things. So that's the way I think about it. My goal being, by the end of a bull market, I want to own like 2 or 3 assets that are absolutely killing it. That's it. I don't want to own 20 things. Like in 2017, I owned so many things. And then in 2019, I only owned 2 or 3 things, and I made a lot of money because I didn't have to think about all this stuff. I could be much more clear about my entries and my exits when I only had to think about 2 or 3 things. It's a lot easier. So that's my advice, not the professional advice or financial advice. So I hope this was helpful. Maybe we'll do another one. If you didn't check out the interview I did with Chris Dunn, or I guess it was not an interview, like a chat, drank a lot of whiskey. You go to Chris Dunn on YouTube, check it out. It was fun. We'll probably do it again soon. And go to Twitter. I'm on Carter Thomas on Twitter. Hit me up if you have any questions. I'll try to get back to you. And I hope you have a great day. I hope you have a great week. I hope this thing I hope we have so much fun with this bull market. I think it's going to be exciting. It's going to be wild. That's for sure. And in the meantime, I will catch you guys later. All right. Peace out.